All right, so what's good, everybody? Welcome back to another Q&A. So what I'm going to be doing pretty much is just breaking down the charts. I'm going to be looking for some possible setups that you guys could look for tonight, along with break down the previous setups and how you could have caught those moves. Also kind of recapping what we were talking about in the last webinar. So I'm going to start with gold. So gold on the daily time frame has finally broken above 1830, and this candlestick over here was the confirmed break. This candlestick closed above. Also pay attention to the momentum that there is within this bullish candlestick. So for those of you guys who have been following me for quite some time, the easiest setup, most simple setup we could wait for is that retest of this 1830 level where we'll then look to take price long. Now we could potentially see price come up to 1850 first. So let me actually clear all of this, which is this area over here, 1850. And if price breaks above 1850, then we could see 1870. So that's where my current price projections are. It does seem like gold is pulling back. And again, remember, what we have to actually wait for is for gold to come back down into this area and start looking for signs of rejection, like long wicks to the downside, momentum significantly slowing down, and then possibly even that bullish engulfing candlestick pattern. Now, what I'm going to be waiting for on a 30-minute time frame probably is for price to actually come back down into 1830, look for some consolidation, and then wait for the break of that consolidation range. Maybe if I want to take it a little bit more aggressive, I'll look to buy it at 1830 off of a double bottom pattern or something along those lines. But what we want to wait for that confirmation for price to continue to trade higher is the break of this consolidation range, which you could also wait for the retest of the range. Look to take price up into 1850 over here, which is our next level of structure. So that's what you could wait for on gold. There's also going to be probably people looking to sell. I'm not going to be looking to sell on gold because definitely don't want to be fighting this momentum over here. It doesn't ultimately make too much sense to me. So that's what I'm going to be waiting for on gold. Now, what we had discussed prior with gold was at this 1813 level. So if you go to the daily time frame at this 1813 level, one thing that I talked about on that webinar was that this is a rejection candlestick. Also notice how price closed above 1813, showing us that support is being rejected, and we could anticipate the next day to go up to that 1830 range, which it blew past that range. Now, I had talked about a few ways you could have potentially caught this setup, either through a bullish engulfing candlestick pattern. And one thing that I did talk about also is that once price starts to break above 1816 is where I'll look to start buying, which as you guys can see, once price did break above 1816, gold actually flew to the next level being 1830. Give me 1 second, guys. Somebody's at the gate on the house, so literally 2 seconds. All right, cool. Anyways, so that's pretty much what I had talked about previously, because if we look at the 30-minute time frame structure, right, we have overall market structure lows being here, and we have the market structure highs being here within this consolidation range. Once price were to actually break above 1816 roughly, that's when I said, okay, most likely we're going to actually look to buy. Now, on the other hand, what I also had said was if price were to break under 1810, that's when you could have looked to actually go short. And as you guys can see, price broke above 1816, where you could have looked to taking a buy up to 1830, and that setup played out so nicely. Literally, you would have been straight in a profit and potentially even caught the rest of this move. So the move from 1816 to about 1830 was 150 pips. To the highest point gold move was about 300 pips, which would have been insane. Now, silver, I never got my setup because price never actually pulled back into the areas. You guys can see there is support over here, and if we do look left, price actually did reject this other level down here. So it did break above, come back down, tested a few times, and then rejected, and then support held here, and it continued to go higher. It did go to the projected target being almost 24, which is practically right here. It did do that, but I never took the trade because, again, I didn't get my setup and I wasn't comfortable with the risk on this position over here based off of like simple risk to reward. Because if I would have taken a position maybe after the break over here, my stop would have had to have gone down here and the risk to reward wouldn't have made ultimately too much sense, right? So I didn't take that position, and I wasn't looking to take that position. Now, silver, again, what we had spoken about in the last webinar as well was that price was pretty much moving down all the way up to here. And for me to want to actually sell price, I want to see a retest and a rejection of this 156 level. And as you guys could see, well, obviously previously, you guys can see that price did exactly that. It went all the way back up to 156. And all of this should have been your first sell signal right here. This first doji candlestick. Remember, these doji candlesticks at these levels of support and resistance show us that there is some form of buying or selling pressure. And this was the first signal to sell. However you wanted to take that sell position ultimately is up to you. If you wanted to take it after this 30-minute bearish variation or this bearish variation here, that's up to you. But in terms of risk to reward, this trade would have played out so well if you would have taken it. If you would have just taken an entry here with a stop up here, even at a target down here, you would have gone at least 2 times your risk, which is what we kind of look for on a day-to-day basis at minimum. As you can see, price completely just broke through that area and continued to trade lower. One thing you could have also set yourself up for is to continue to look to go short at this area, because remember, as long as price trades under resistance, we're going to continue to look to go short. If price were to start breaking above 156, 100, that's a different story. We would have potentially looked to even go long. But there were so many sell signals that you could have taken. You could have taken it here. You could have taken it over here as well. Ultimately, it's up to you as a trader on how you're going to take that. But that setup was as clean as it possibly could have gone. Price went all the way back up into resistance, gave us that entry signal, and went all the way back down into support, where it rejected, came back up into resistance, and then broke support. And one thing I talked about in the pullback section of the course is if price is trending bearish and you start to see some form of consolidation like this, the probability of price continuing to break to the downside is a lot higher, because again, the previous trend is bearish, or the current trend in this situation is bearish. Now that price is actually broken under this level of support here at about 156, 463, that was the confirmed break of this level of support right once this candlestick closed under, and this will confirm the break here as well. So I do see price actually coming down to 153,846. Now, I don't know in terms of where I want to see price pull back to. Ultimately, the best setup would be for price to pull back into this area, but then we're talking about price pulling back roughly 618%, which isn't really the strongest trend, but would be a nice pullback. So we could wait for that. But then if price does pull back all the way there, it's going to show us a lot of weakness to the downside. So what I really want to see is price actually pull back into this area over here, where as you guys could see at one point in time, this was support all throughout this range. So what I'm going to do is section off the charts and give myself 2 areas for price to actually look to pull back into, where we can find established resistance and then look to go short with price. So we know that price overall right now is in a bearish state. So again, what we could wait for with price action is for price to actually pull back into this resistance, look for the rejection, or look for price to pull back into this resistance and look for the rejection back down to 153,800. Let's leave it at. The only thing is, it is going to be Friday, so I don't want to be holding positions for too long, and I don't want to make assumptions on this weekly time frame as well, because the weekly time frame already has a pretty big enough candlestick. Now, does that mean that GJ doesn't have the potential to push down in another 80-cent pips? Of course it does. I'm just targeting the next level of support on this weekly time frame, and on the daily time frame being right here. This is where I've established my area of support. And after that, if price were to break this area, and again, it's just moving your supports down, looking for the next level of support and resistance where you could take price to. That's pretty much what I'm going to wait for. I do see price coming back at least into this 154,900 range. And again, that's simply by looking at previous market structure. What do we have here? Support. What do we have here? Support. You can even say this is resistance here as well, with a gap of this level of resistance. But since there is previous support here, now price is kind of trading under this area. We could look for price to pull back into that level of support on a lower time frame, such as like an hour or a 30-minute. Look for that lower high to actually be established and look to take price back down into 153,800. So really quick, if you guys understood that, want me to break anything down, let me know in the chat. If not, I'm going to start allowing people to become panelists to come on and ask me any questions. So let me know what you guys thought about the breakdown. If it was good, if it was clear, anybody had anything they wanted me to cover on the breakdown, I think it was pretty simple. So Now, did you end up breaking silver down? Yeah, I already broke silver down. So, was good. All right, cool. So, anybody who wants to come and be a panelist, this is going to be the peer review session of the webinar. I'm going to choose 15, 25, 30 people to come on and ask me questions. So, if you want to come on and ask me a question, just type it in the chat, or you could raise your hand and come on and ask me a question. Okay. Okay, got you, Samuel. Give me a second. All right.
Yeah.
Yo, what's good, bro?
What up?
I got you, bro. Okay. That's fine. You guys don't have to come in if you don't want to. But if you do, make sure you raise your hand or put it in the chat. So I'm gonna give. All right, hold on, 2 seconds.
Yo, my camera's acting up. Can I leave and then you just have me back?
Yeah.
All right, thank you.
All right, cool. All
Shit.
What's up, my boy?
Yo, what's good, bro?
Killing them charts, bro. You know how we do.
Yeah, of course. All right, so I'm gonna give you guys maybe like another 2 or 3 minutes to let me know if you guys want to come in. If not, we'll kind of just get started. So again, I'm only going to be focusing on the questions that are being asked for everybody who's a panelist. So if you're not a panelist, then just let me know if you want to come in and ask the questions. If not, then you're just gonna have to wait for the next webinar to get your questions answered. So again, I want to focus on a smaller group of people within the overall group. Let me pause my screen real quick. All right, cool. All right. So, I'm gonna focus on you guys, obviously, who are in the panelists. If you moved in, let me know whatever questions you guys have and take advantage of the fact that I'm gonna be able to answer all of your questions. Doesn't matter if it's a technical analysis question, if you want me to break down a chart, if it's a question on psychology, just let me know so we can cover it. And again, take advantage of that. Now that I'm focusing specifically on you guys, not like the overall groups. I know some people don't typically always get their question answers in the overall group. So for whoever wants to start first, you guys can go ahead and ask me whatever you want, or break anything down if you want me to break anything down.
I'll go first.
Yeah.
All right. So I had a question about GJ. So I actually had 2 questions. So the first question was just about like the levels, because I have different levels and I kind of base them off of like previous month lows or like whole numbers and things like that. Like I have like last week's low, like 155, 500. have that marked off. And then I have November's high, like 154,700. Like, do you think that those are still good levels to kind of base them off? Because I know they're a little different from yours.
I mean, we're all going to have different levels and we're all going to view the charts very differently. It's always good to understand where you are in market structure in terms of what's going on a week to week basis to see if maybe anything in the trend is changing. For example, like if you have the weekly levels marked off, you know that this might have been last week's low and this was last week's high. And if we look at the current week, this is this week's high and this is this week's low. So what we see overall here is a change in market structure, because now if we look at price action went from making higher lows and highs to now we're making lower lows and lower highs. So it's good that you are paying attention to where we are market structure wise. At the same time though, you want to look for different areas to where you're going to be looking to take trades from within the price action itself. So you'll have those levels marked off, then you can have your major levels marked off to where you're going to be looking to, again, take positions from. Now, I'm not going to say, we're all going to have the same exact levels, but we could very much have very similar levels because, again, like we're looking at the chart and identifying what the major levels are, and that shouldn't necessarily be something that's too difficult to identify.
Okay. So for instance, like if we do have a level that is more so around the whole number, would you keep your levels there or would you kind of move them based on like different wicks?
I mean, do the whole numbers like make sense to you? Like what's the idea behind having them with the whole numbers?
Well, I guess like I'll see a level that is like support and resistance, and then I kind of see which whole number is like closest to it. And then I'll change that to see if it kind of makes sense around that area.
I mean, I get where the whole number ideology comes from. But what's more important to me is if when I place the level on the actual screen, does it make sense to me? Along with identifying the levels themselves. Like, let's say if I was looking for this whole number, like 155 flat, right? That would be right here. I would much rather have it down here where it's not at 155 flat, but we see this wick test and this wick test it. I mean, ultimately, again, like it's up to you if you want to put out the whole number or not. It's not really going to make too much of a difference, especially if it's only like a few pips off. But as long as you have like the general concept of, prices reaching a key level at this point in time, and you can see that it's marked off as a key level in the chart, then, you should be fine. You should be good to go practically. I wouldn't really stress it all too much as long as you can identify where your major levels are and understand why that's a major level, and also identify where your minor levels are and understand why that's a minor level.
Okay. And so I have one more question, not to take too much time, but so during the entries, so I know like I try to trade during the London session because like I work and all that stuff. But so if like I know some areas that were some recent high areas or lower high areas that I wanted to trade on, but because it wasn't during that session, I didn't take. But like I noticed like a lot of people in the group did take it. So and then also because it didn't kind of pretty much form an engulfing like on a higher time frame. So I just decided to kind of wait. Do you think that it's still okay, even though it didn't show a higher time frame engulfing, to take those entries?
I'm trying to picture this. What do you mean by? Because you mentioned time frame, not session.
Yeah. So like if you go to the 1 hour on GA, so like right there where resistance is at 15600 area.
Yeah, right here.
Yeah. So like I know like a lot of people were taking sales right there, but in some of the sessions on the higher time frame that I trade, like I wasn't getting the higher time frame bearish engulfing formation, so I wasn't taking those trades.
Yeah, I mean, when you're gonna wait for like a higher time frame confirmation, the confirmation there is gonna be higher probability signal versus a lower time frame, which is a lower probability signal compared to like a 4-hour time frame. But then the thing is, like, you're gonna sacrifice risk to reward that way. That's why when you go down to like a 30-minute time frame, and as long as you can identify the level again and identify where the proper stop loss area is, it shouldn't matter all too much if you're getting in on the lower time frame, because again, like, the setups are all relatively the same. Now, it only really matters if you're going to wait for a higher time frame confirmation. If you may want to be a little bit more conservative and you're going to be swinging, if you're going to be swing trading, right? You could have gone down to a 30-minute time frame perfectly and looked for any of these rejections for you to take the actual trade itself. Now, again, the only problem you could potentially have with taking a lower time frame trade is that you'll get a nice signal like this. The 4-hour hasn't closed yet, and then you have a 30-minute engulfing that continues to go up and break your area, and you kind of entered too early. So it's really all about finding balance in between waiting for the right signal in the lower time frames versus tying in the signal with the higher time frames, because the higher time frames can come and you can have a rejection like this right here, right? Notice how this candlestick was still floating, right? The best thing for you to do in this situation when the 4-hour candlestick is still fluctuating at your area is wait for the 4-hour candlestick close. Once you see a big rejection like this one and the 4-hour candlestick close, then you could go down to a 30-minute time frame and see what it looks like. If you see that there may be a bearish variation, or maybe even price kind of looks like this, right, where you have a bullish candlestick come right back up to the level, then this is where you want to start looking for your entry. You want to start looking for either bearish variation or a bearish engulfing candlestick pattern, right? So you would have essentially either waited for your entry, or if you would have taken an entry a little bit more aggressive, maybe after this 30-minute rejection here as well. But what's established already is that the 4-hour closed and the 4-hour rejected. Notice on how this candlestick price was trading all the way up here. And then it came before the candlestick actually closed and came and closed right back under resistance. At this point in time is when you should have started looking for an entry. Right once that 4-hour candlestick actually closed, then you can start looking for an entry. You don't want to start looking for an entry while the 4-hour candlestick is still fluctuating and hasn't rejected the area. But once you get that 4-hour close and that 4-hour rejection, you can then start to look for an aggressive entry. Why? Because it shows us price is showing us that we've already rejected that area. So then you could look to take a position on a lower time frame. Until then, you want to wait for that 4-hour close and that 4-hour rejection.
Got you.
Yeah.
Thank you so much.
Yeah.
Raul?
What's up, bro?
I just got a light question. When I pull up my sessions indicator, it don't look like yours. Like my whole screen go purple.
It's probably a different session indicator.
Which one you use?
I don't know. It literally just says sessions.
But I gotta find that one. Cause mine don't look like that.
It's the settings. It's the settings, but you have to change it from like all the different sessions. You just put the New York, London, and crossover.
Just put the New York, London, and crossover.
Yeah, well, the crossover it'll incorporate it itself once you put London and New York.
Does it look like this?
Oh yeah. I see. I had to add those to it. All right, good looks, bro.
Yeah, bro, no problem.
All right, cool.
All right, so quick question.
What's up, bro?
Oh, sorry. Yeah. So, more about entries.
Okay.
So I'm marking my levels off pretty good. I'm very similar to yourself. I'm looking on the 4-hour. But can you break down a little bit more in detail on how I should go about taking my entries? Because, like I mentioned earlier, I miss out on some trades. Because of that, I'm expecting price to hit a resistance level, drop, and all that, and then it does it. I'm not in the trade, and it just gets frustrating because.
What do you mean by it doesn't hit the resistance level?
No, I'm saying when price hits a certain level, I'm expecting it to, let's say, drop like a GJ. It was in a downtrend. So I'm expecting to take a short, but I'm saying I missed the trade because I'm not looking at it properly to take an entry. So can you break down
where are you looking for your entries?
I'd like to I was looking at 50-minute time frame after looking at the 4 hour, seeing that the 4 hour had, made a pin or engulfing candle of some type.
Mm-hmm.
So then I go down 15 minutes to try to get a tighter entry. But I seem to be missing the boat a lot of times. So my question is, should I be looking more on the 30-minute time frame, or does it all depend on just what presents at that moment?
I mean, really, it all depends on the setup itself, because somebody would have taken a position here on the 30-minute time frame, while somebody else would have taken a position here based off the hour time frame. Really, where we're looking to enter the market again is at levels of support or levels of resistance. We're not looking to enter in between, because then we just have a high probability that price is just going to go to the next level of support or resistance and potentially take us out of the position. So when it comes down to entering the market, it's I feel like people overcomplicate it a lot, because really all we're looking for is a few candlestick patterns. And we just have to identify those candlestick patterns when they are presented at these levels of support or at these levels of resistance. You know what I mean?
Right. No, I understand. So how many times so if you see price, for example, right there in PJ, and where you got the three.
My bad, bro. You sound like we're far away.
Sorry, you hear me better now?
Yeah.
All right. Yeah, I have to move it closer. So if you go to where you got your line right there, the black horizontal line. Okay, move to the left a little bit to the middle, right there. So that cluster right there of wicks, right? So at what point do you just stay on this time frame on the 1 hour? You'll wait for that engulfing candle, and then you'll hit it right there, or will you go down on a lower time frame and look for a bearish variation pattern to enter?
Yeah. Well, once I see this first rejection right here, this big doji candlestick, this is a sign for me to start looking for an entry pattern, because now we've rejected resistance, right? So once I see this big doji candlestick pattern, I have two options, really. Wait for an engulfing or variation pattern, or take an aggressive position and just sell right then and there. Everybody's going to do it very differently, but essentially what I'm doing is I'm flipping between a 30-minute time frame and an hour time frame and looking for my sell position. Here are the pros and the cons, right? If I would have taken the first signal on this 30-minute time frame to actually go short, which would have been here, right? Immediately the trade is going to go to drawdown, right? Which is not that big of a deal. I mean, drawdown is drawdown. Immediately the trade is going to go into drawdown, right? And on the hour time frame, you never got a real strong sell signal. You got a strong rejection, but not a strong sell signal. Then you would have been stuck in consolidation for about 2 hours. And then here is a stronger sell signal at this hour time frame. So I'm constantly flipping between the time frames to see what's going down. Now you could have taken another position based off this 30-minute time frame over here with this big rejection, and taking a position there as well, where you would be getting a lot closer to the level. You'll be minimizing your risk to reward ratio, because I personally like taking aggressive positions, right? So let's say I take a position right here. My stop is going to be right here. My target is going to be right here. So I'm getting roughly, I'm going to maybe make the stop a little bit bigger. Let's do 20 pips to be a little more conservative with fluctuation, right? Over here in this situation, I'm going to be getting roughly a 3.33 risk to reward ratio as an aggressive entry. Now, if I were to take a position right here, right, with the same stop loss, same target, look what happens to my risk to reward ratio. It's cut in half. So really, it's all about finding what you're comfortable with and how you're comfortable at making an entry, knowing the pros and cons of waiting for a good sell signal versus taking an aggressive position just after some rejections, right? Ultimately, if you're right, then you're going to be right. As long as there's no stop hunts or liquidity grabs, you're going to make money essentially, right? As long as you have your emotions under control. But again, now it comes down to how can I minimize my risk and maximize my reward at the same exact time? It's always going to be safer to wait for an engulfing candlestick pattern, a bearish variation pattern, right, than just taking an aggressive entry, especially like to avoid unnecessary drawdown or putting good money at bad risk. And it may take you quite some time to understand how you like to enter the market and what you're good at entering the market, right? But ultimately, like when it comes down to an entry signal, this is an entry signal right here. Why? Because price rejected resistance and we have a nice clean engulfing after that. What happened after that? Clean traffic, right? But notice like it's kind of choppy here, here, here. Like there's no real strong entry signal in this hour time frame. Here, when we started to get a little bit of an entry signal, it's a medium probability entry, but it still went right down after that. Because again, we've identified that direction is bearish. We've identified that the potential trend is bearish. So we're going to wait for price to reject resistance to look to actually sell. And then price, every time it gave us a nice entry signal, went right down after. There's also another entry signal right here. Notice the nice, clean, high probability engulfing signal, and price went right down after that. So, I mean, entries aren't something that's too complicated, but you're simply just going to have to practice different forms of entries to see what works for you and what you're comfortable doing with and what ultimately you're good at.
Right. Okay. Appreciate that. Yeah, I think I'm overthinking it too much.
Yeah.
Because I am right on direction and I'm wrong on when I'm entering. So I just I got to work on it. Thank you.
Yeah. Remember, the concept of entering the market is super simple at the end of the day. Because I could tell you, wait for price to come up to this line, right? Wait until you see a pattern like this and enter the market, and then this is when you sell, right? It sounds super simple, and really it is, but when you're in your own headspace and you have live money at risk, it's a lot difficult to actually apply and execute on this super simple concept. I could probably teach that concept to a 4-year-old, you know what I mean? But again, when you have live money at risk, you know, your emotions come into play.
Yeah. Okay. Cool, man.
All right, so quick question. Could you explain like the bearish and bullish variation and like show us examples?
Pretty much what a bearish variation is, it consists of two bearish candles to make your entry point. And a bearish engulfing typically consists of one candle to make your entry point. So when it comes down to a variation pattern, we have, or an engulfing pattern, a signal, right? We have two types of signals. We have a high probability signal and we have a medium probability signal, right? A medium probability signal is a signal that's like this. This is a medium probability bearish engulfing. Why is this a medium probability bearish engulfing versus this being a high probability bearish engulfing? Is very simple. Notice how price failed to close under the low of the previous bullish candlestick, right? Showing us that price didn't actually close under the lower low, showing us that there's not enough selling pressure really. So the probability for price to actually pull back is there, but at the same time, the signal is still there to sell because it is an engulfing candlestick pattern. It did close under the open of the previous bullish candlestick. Now, this is a high probability engulfing simply because price closed under the low, showing us that price has a high probability of continuing to go down because now price has closed under the previous lower low. That's pretty much the definition of the high probability, the medium probability. Now, when it comes down to an engulfing candlestick pattern, typically it consists of one bullish candlestick, one bearish, or one bearish, one bullish. Notice how there's one bullish candlestick here, and then we have price where it came down and closed under the low of the previous bullish candlestick, right? You can stop me at any time if I'm losing you, by the way. Right.
I mean, I'm good on the bullish engulfing and the bearish engulfing. The other question that I have is, could you break down AUD and USD?
Yeah, AUD.
And on the course on how to journal your trades is a duplicate of another video.
Yeah, I saw that in the chat. I gotta upload the new one. Right. It's a duplicate. But I mean, breaking down AUD USD. So this isn't necessarily a pair that I have ever traded in my life, but you always kind of want to start off on the weekly time frame and then work your way down from there. So when it comes down to AU on the weekly time frame, again, we can identify that this is resistance, this is support, and we draw a line right through it so we can identify that area. Notice how the previous week price tried to break back above resistance, but it failed and closed right back under resistance, showing that there is selling pressure and showing that resistance is getting rejected. Notice how so far this week as well, price tried to break above resistance, but ended up rejecting resistance. So we have two rejections of resistance. Now, if we go to a daily time frame, we can see that in a little bit more detail, where yesterday price tried to break above, but clearly there was enough selling pressure where price ended up closing back down under resistance. Also, notice how price broke under the previous day's low with the result of a lower low here. Now, the only thing is that you have to be careful if you're looking to take sells on AU, because this right here is a level of support within this consolidation range. Now, so far, obviously, a level on the weekly is going to be a lot stronger than a level on the daily. So price could continue to go down. But if I were to look to actually take a position on AU, because of the fact that price has this huge rejection towards resistance, I'm going to wait for the next level of resistance or the nearest level of resistance to be retested, where I'll then look to go short. And I've identified that the nearest level of resistance is going to be this one right here. So 0.72, 150. If price can actually pull back up into that area, show me some form of a double bottom, a double top, then at that point in time, I'll look to actually sell price with my stops above resistance. And if we look at the range, we have a potential 30 pip move to the downside, which would be your first target being right here. So I would wait for price to pull back up into this resistance and then look for price to come back down into support. That's what I would wait for.
All right, so I have one more question. So the way you understand these charts, when you like some things that you be explaining, like let's say on a weekly time frame, you'll say something like last 2 weeks it closed around this area. So this week we're expecting it to close around this certain area. Is this something like you learned from experience, or is this something that like was like taught?
No, it's 100%. You can never teach experience. You really can't.
All right.
So understanding, where the price action chart is and at what areas it's trading at, and understanding, where you could expect price to go to next, simply just comes with experience.
All right. I just want to say thank you a lot. I really appreciate it.
Yeah, but of course, no problem.
Hey, Raul.
Yo, it's good, bro.
Yeah. I got a question about the USD pairs that you trade. The USD pairs that you trade, so like GU, other USD pairs. Do you actually correlate them with the dollar index?
I don't actually. I know a lot of people do. I don't. Because it's still a currency pair. Like let's look at gold, right? Gold is very bullish right now, right? So you look at the daily time frame, and we see buyers all day, right? You go back to AUD, USD, it kind of looks like a sell. You know what I mean? They still have USD in them as the core currency, but the base currencies are different. So I would treat each pair as its own like individual. You know what I mean?
Yeah. Got you. Thank you.
Yeah, that's how I would do it, at least. I know a lot of people do correlate them. I don't see why I would do that.
All right. Thanks.
Yo, when is the best time to trade US 30?
New York session.
All right. And can you go over US 30 right quick, bro? Please.
Yeah. So let's start off on a monthly. Take a look at the monthly really quick. So monthly so far, if we look at the monthly time frame, there's detail, yes, but we know this is something that every single year we're looking for it to grow at least like 10%. So for the monthly time frame, we have higher high, higher high, higher high after each month, and it seems like we're pulling back into these last 2 months lows over here. So I'm gonna keep that marked off. So I'm gonna keep this marked off here. I'm gonna write this as monthly lowest close, right? And let's actually move this away. I'm gonna lock it really quick. Let's go to a weekly time frame. So the weekly time frame, clearly price is currently trading at support. So ultimately, we have resistance right here at 36,500, right? I'm going to keep this marked off here as well. So we have support and then we have resistance. What I'm going to do is rename this to weekly support, right? I'm going to keep these marked off so I can get what price is going to do just in case if this level breaks or if this level breaks, right? So after price rejecting resistance, it's trading currently back down at support where we do have this 50 SMA. But the thing is, if we look at price, right, it's higher low after higher low after higher low. So could this be another potential higher low point? Really, we'd have to wait and see. We could see short-term buying pressure with this current price, but this week is super bearish. Notice on how with this week over here, it looks very similar to this current weekly candlestick. I think if price were to go bullish, I am not too confident that it's going to happen this week. It could potentially happen Monday because this weekly candlestick has to close for another weekly candlestick to actually open, where we may see sellers actually try and push price down lower, where then, it's either going to be sellers are going to break the area and continue making lows, or buyers are going to come in and push price up, or we'll have some form of a big rejection. But that's too much predicting. But if price were to go bullish, I would like to see this candlestick actually close first. Now, daily time frame, things are a little bit different. We know we're currently trading at weekly support, but we have daily support about this area over here. So we have daily support here. So I'm going to keep this marked off as the daily level of support. And then we have daily resistance around this area here as well. So it's one of two things that's going to happen. I'm going to be expecting there to be buying pressure in this area. I'd want to see what would happen if price were to come up to this zone right here, where we could see price actually go down from this zone. 4 hour time frame, again, it's super strong. For me to actually look to continue to sell, I'd want to see price come back into this area, have some form of rejection, look to take price back down. Once price starts to trade above this area, we could see price come up into this area over here, maybe even 35,300. The thing is, again, I would want to see that resistance established, because if I would be looking to actually sell, what we see here is pretty much a very similar situation where price rejected the support, came up in a resistance, rejected, and then continued to come back down into this area, which could set you up for a nice little position here. Or if you go down to like an hour time frame, this could be a pretty nice trade for me. It's a pretty nice zone, the 250 pip zone. So that's a potential setup that I would wait for right there, especially that on the 4 hour time frame. You have previous support. You can see this level of resistance does get tested multiple times, essentially before even a big breakout. So that's when I would want to wait and see what would happen at this area. If there's a rejection, I'll look for price to come into this area. If there's a break, wait for the retest, look for price to come up to the next level of resistance, which is up here, maybe even right here. So that's what I would wait for on US 30. Check NAS, because NAS looks a little bit different. See, the thing about like US 30 is like price action is so much cleaner on the S&P 500. That's why I'd rather trade the S&P 500 versus US 30. The S&P 500, it's like, okay, well, here's daily and weekly resistance. Let's just wait for price to come back into this area, give me that trade setup, look to take price down. It took me a lot more time to look for a setup on US 30 because there's a lot more chop versus the S&P 500 versus the NASDAQ. So really you just have to wait and see until New York session, because there's still a whole 12 hours before the stock market opens up. So I would want to see how price changes within this 12-hour period.
So what you saying? Oh, my fault. So what you saying for the S&P 500 is for it to break back above that resistance, right?
No, for the S&P 500, I'd like to see a retest of this area, a rejection, and then look for price to go short, because if you look at structure here, like price is just forming lower lows, lower highs. We're starting to break levels of support. So we could see price continue to actually go down and start trending bearish. And after this huge bullish one, got another bullish one here, another one here. So we could see a pullback here. How long? Who knows? There's definitely a lot of momentum within this weekly candlestick. So if this weekly holds, we could see price come back down to these previous lows, which is, way down here if this bearish trend holds. So let's just kind of wait and see what happens. That's what I wait for. Thursday breaking retest.
And you would trade S&P 500 like New York session?
Yeah, 100%.
Okay, cool.
Raul,
Yeah.
yo. So do you recommend back testing?
Yeah, of course.
So like, can you like show me how to do it? Like, I was confused like when I wanted to back test, like I was confused.
Well, what are you confused about?
I mean, like I feel it's not like the live market,
Well, I mean, backtesting isn't the live market. You're looking at previous data you've probably already seen. But
Yeah, exactly.
are you using the replay mode?
Yeah.
I mean, well, when it comes down to backtesting, it's kind of like you just got to be on the replay mode and looking for these setups, doing your top-down analysis, looking at the daily time frame, looking at the 4-hour time frame, using your sessions indicator so you know what times you're trading, and only looking for setups like if this S&P 500 during the New York session. And the same way, essentially, you would journal is very similar to the same way you would backtest, looking for multiple confluences, right? So this is Asian session, this is London session, and this was the New York session candlestick. So it's kind of like identifying, okay, well, this is 4-hour time frame. Let's go down to an hour time frame, right? So, I mean, looking at the S&P 500 here, I mean, we've already seen kind of what happens. But what we can identify is that, again, like it's pretty much like you're trading live, right? You have to treat it as live as best as you possibly can and journal the same exact way you would journal on your actual trading account. And like if you're trading live with your backtest, listing all the confluences, why you took the trades, and really forming a system on how you like to enter the market, understanding, hey, I don't really like taking engulfings. I'd rather be a little bit riskier. Yeah, I know my win rate will take a hit because I'm taking way more aggressive entries, but it's compensated by the risk to reward. Like that's such like a broad topic. I need something a little bit more in depth and just kind of be like, oh, teach me how to backtest, because like there's so many things. It's like it's almost like a family tree, right? Where you have backtesting as a subject, and you have so many different topics that you could talk about in backtesting. So is there anything in specific that you'd like me to go over?
No, just it. Thank you, Aaron.
Well, I don't hear you too well. What did you say?
Was he still going?
I'm not sure.
All right, I'll go.
Yeah.
So a concept I'm trying to grasp, and you were doing it earlier when you were doing the initial breakdowns. I don't remember which pair, but when you get towards like a key zone and then you zoom into like a 30-minute or 5-minute, just a lower time frame, and then you say, okay, if it breaks above or below like these highs or lows, you know what I'm talking about?
Yeah, I think so.
And then so when it's doing that, I'm just wanting to understand the concept of like right when it breaks, or do we always wait for the retest? Because when I'm waiting for the retest, a lot of times it doesn't happen, especially lower time frames when it's already at that key level. So I was just wondering like if you could go over. So like go to the left a little bit. Right, no, just like the top at, I can't see the levels. 156. I mean, yeah, it probably happens at every level. So like any level where you'd see a reverse, yeah. So you can go there, and then go down to like a 30-minute.
Okay.
So like, yeah, would you mark off like to the left where there's a lot of candles right there? Would you mark off like the high and low and say, hey, if it goes above here, we'll do this, or below? Like, is that a area you would do that at?
The thing is, like, this is already in session. This is in session, so really there's no trade here. This is London. So if you look at it, like, this was one trading day, and let me go on a different chart. Am I using one bigger? So let's go here. So we were.
Like, my question makes sense though. Like, am I making sense what I'm asking?
Kind of. What I'm getting from your session is like, from your question is like looking at it from an intraday perspective. Would you always wait for the break and the retest of a high or a low?
Right.
Yes and no, because what we're looking at mainly are the more major levels, like the hour levels, the 4 hour levels, the daily.
Right. So I'll be looking at like a 4 hour, like a daily, and I'll get my key level, and then I wish I knew exactly where you did it, because you did it earlier, literally in one of the breakdowns, and then you go in closer to, okay, you're at your key level now, and then you're at a lower time frame, and then you just mark off like where you see levels at the top and bottom of, like, you know, a consolidation area pretty much, and then you just say, okay, if it breaks out above, we're going up, or if it breaks below this level, we're going down.
Gold?
I think it might have been gold.
Like here?
You're on a 4 hour. Yeah, so it would be in a lower time frame though.
Right here.
Okay, yeah. So those, right, exactly. So is that an area where you say, all right, if it breaks above this, we're going here, or below, we're going, because it's the two-way areas that I'm confused.
Why?
Because I'm like, okay, if I'm looking for it to be buys, then why am I even considering like there to be?
Because just because you're looking for something doesn't mean it's going to happen. So you have to prepare on what you're going to do next.
Mm-hmm.
Right?
All right.
So if we could be looking for buys, and one thing I had said was, okay, well, if gold breaks 1816, we're going to go up. If gold breaks 1810, we're going to go down. Do you know why?
Because it's that key level. So if it picks a side of it.
Yes and no, because 1813 is a key level, right? So why I'm looking for buys. 1813 is a key level that was previous support, or my bad, previous resistance, which is now rejected and held as support.
Mm-hmm.
So we've already identified that support is there, right? And there's a rejection. So now that we've rejected support, we're going to be looking to what?
We're going to be looking to buy.
Exactly, right? So if we go to a 4 hour time frame, what does price look like?
Just in general, it looks like, well, I see a higher low if we like know that's happening. Like where am I? Could you like hit replay to where I should be looking at? Like, oh, right there is consolidating.
Exactly, it's consolidating. And when price consolidates, typically decisions are being made. Now, when price is consolidating, one or two things are going to happen. It's going to break up or it's going to break down. We're looking at the probability for price of breaking up is a lot higher because we've rejected support on the daily time frame. So if price breaks above this high here at 1815, price did what?
It shot up, like it broke out and then it took off.
Yeah, but if it breaks above 1815, which is a high, and
it broke the high. It made a higher high.
Exactly, it made a higher high, which tells us signs of what?
Signs of bullish pressure.
Exactly.
So when that happens, like, so when are you buying now? Because then it's like, okay, now I'm looking for the retest, but that is not coming. So like when?
Sometimes it's not always going to happen. Just like how I missed a trade on silver, where I waited for the retest of this area, it didn't happen, right? So ultimately, if you want to be a little bit riskier, that's up to you as a trader, right? You could have taken a buy after price pulled back here, retested. another structure, because there's so many structure points within this area here.
Yeah, for real, right.
Right, looked at maybe like a 15-minute time frame, identified support here. It would have been different. Personally, it would have been very hard for you to catch the buy if you would have waited for the break of this area. But that's not how I like to trade. I like to trade once price actually rejects support, right? Because I'm getting in as close to support as I possibly can. It's a little bit riskier, yes, but at the same time, the risk to reward is there. Because everybody would have traded this very, 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 very.
So you're saying your entry would have already been in by that time? Okay. So like at the bottom of all that.
Let's take some examples, right? So if I didn't enter here, where would I be looking for a retest and a break and a retest? Right here. Did it happen here? No. Where's my next level? Right here. Did it happen here? Yes, it happened here.
True.
Once price actually broke above, notice how it came back down into the zone. Since I'm already in a 30-minute time frame, what I'm going to do is hop between the 5-minute and the 15-minute. This 5-minute time frame, we could see the break and price retesting all throughout this range here. I probably would have taken a position after this candlestick right here.
Yeah, because you got a level to put your stop loss now.
Yeah, because now I have at least a level to put my stop loss. Now, I identify it's not the strongest level, so I'm not going to go in with crazy risk, right? But at the same time, I could get a nice risk to reward ratio because I'm trading a lot smaller of a time frame, right? So we have like a 23, let's see, we have 25 pip stop loss. At least there's support here. We go to a 30-minute time frame. There's market structure here. So previous is not holding a support, and their price goes essentially.
Yeah, that makes sense. So yeah, just basically, I'm getting it now. So basically, yeah, you mark it. If it goes up, you're looking for the retest, and just chalk it up. If you miss it, and just keep looking for those levels.
Exactly what I did with GJ.
Yeah, that makes sense. And then, and like in GJ, I messed up because at the bottom, the last bottom that there was, like this, I got in on it.
Right here?
And yeah.
What'd you do?
If you go, so I got in, and I had literally right when it formed that new high, that was right. Yeah, my stop loss was literally like right around there. And because if you go to like an hour time frame, or no, go to a 4 hour, because I'm not marking up on an hour. Zoom in. Okay, you see the bottom of those two left, go left bottom. Yeah, that one and the one right next to it. You see where they closed at? See how they have similar closes?
These two or these two?
Those two. Yeah, so I had that, and I also had the level you just marked off.
So it looks like it broke, retested. Is that what you're trying to say?
Well, I just had my stop loss above that where it is now. I got in at the bottom, and then I figured we were going lower, and I just put my stop loss above there.
Well, you know why I always put my stop or my levels at the wicks?
Why do you do that? Because it works better, honestly.
Because it shows us where price rejected as the most accurate level of support and the most accurate level of resistance. Because if I were to tell you this line is support, and you would have your horizontal line right here at these two closes, right? You would have seen that, oh, hey, price closed under here. I could wait for a break and retest and look to actually go short. Versus a little more conservative, be like, oh no, support's actually down here. Ultimately, it's an overall zone like this.
Right. That's how I had it. That's pretty much how I had it looking.
At this point in time, price is still in support. This candlestick, when it closed down here, was this initial break. But what you did was, where'd you sell?
So what time are you at now? You're at 13. Go back. So I got in. Let me just look at my thing real quick and tell me. Let's see. Got in like 7 a.m. and then it bought back at 19, which is what for me? Like 2. Should that be? Honestly, like my mental was all over today, so I put in a few. I got it at the bottom there. The left go up. No. Like 7 a.m. for us. 7, 8 a.m.
Like right here?
Yeah, so I got in there because it hit the top of the zone I told you about that. We figured out there's the wrong zone to have. It bounced off that, started going down. So I put the sell, put my losses above it, and then that's where we see that big bull candle. It took it out, and then I actually got back in on a sell there, but my mental is so messed up, so I'm not even worried about that. Like I just screwed myself.
What you did was you sold at support, and then you don't have a proper stop loss because our stop loss has to go above resistance. This is why we always want to sell at resistance. If price was down here and you saw this, you got to tell yourself, okay, well, either I'm going to miss this trade, or I'm going to wait for a break and retest of this level, or wait for price to retest and reject this level where I'll look to sell. Right? You never want to sell at support. I've made that mistake so many times, and look what happens typically. Why? Because there's going to be some form of buying pressure at support. Sometimes you'll get lucky and it'll break right through, but it's never a good idea to sell at support. You just got to sit on your hands and accept the fact that you didn't get in where you're supposed to get in at, which again is resistance, which is way up here. You would have won this trade if you wouldn't have sold down here, and that's just something that you have to put in your journal.
Right. And I saw it too. Like if you go to 30-minute, I saw that entry too. Like I was just, like I said, my mind was so messed up. If you zoom out a little bit, you can see how right through there. So there's a level right through there where it rejected off in the middle. It's so clean. No, go down like where it rejected off today. Go up a little bit, just a little bit. Up. Yeah, like right. You see it all through, just up like a centimeter more.
Yeah, but those levels aren't important. Those are just.
Oh, so don't even worry about those neither.
Yeah, don't even worry about those because again, remember, like, where do you see the major rejection? Right, you see your major rejection here. Where do you see your major rejection? Here. So whatever happens in between, I don't care because I'm not doing anything in here. What I'm doing is waiting for our major levels being here where I'm going to take trades off of. You could have even bought GJ this morning and made money buying it here or even buying it here, right? But again, whatever happens in the middle, completely not ignore, but you do not want to take trades in the middle because why? You're going to be caught in this. You're going to be caught in this.
Yeah, that's probably why my mind was so messed up because I'm dealing with all this stuff in the middle.
Yeah.
But that's tricky though because you could see like I don't know if it's it like formed a bullish engulfing right there where he took a trade on the sell, not at the bottom where he took the sell trade.
Yeah, the bottom right.
At the support level, at the right, all the way to the right, to your right.
This one.
Yeah, right there.
Okay.
It's kind of tricky. You feel me? It pulled out a bullish engulfing and then it faked out and went down. You feel me? What'd you say?
Why is it tricky?
Because you feel me? It pulled out a bullish engulfing and then you're thinking it's gonna go up and then that shit just went up a little bit and then went straight back down.
Yeah, but you got to remember, it doesn't matter at the end of the day what you think.
Yeah, I was anticipating the sales. I just sold at the wrong time.
We've got to switch our mindset to understand probabilities, right? We're no longer trying to be emotional in the chart. So it doesn't matter what you think. It doesn't matter if you're trying to spit game at the market for it to go down. None of that matters. What matters is the math and the probabilities behind what's going to go on with price. So again, going back to the pullback section of the course, we understand if price is overall doing this and then starts to do this, where do we see the probability of price going down, especially if we've seen two rejections?
To the lows.
Exactly, right? That's the probability. So we have to trust in the math and in the probability for price to continue to trade lower. This obvious clear as day is a fake out, right? But again, you're dealing with a lower time frame. There's gonna be noise. You bump it up to a 4-hour time frame. What is this? Just a wick.
Yo, but I honestly I know I messed up. Draw the box again. Draw the zone. How you would draw that supply zone? No, just on the same time level with a box. No, 4-hour. This is what I did. Now I know. Draw with a box to draw your. Yeah, I did that. I zoomed in to the 15-minute or whatever lower time frame, and then I was dealing with it off that. And in my head, I see a top and a bottom. That's why I messed up.
Yeah, no. I mean, as long as you understand why you messed up, right? Then Just
Yeah, because now it makes sense visually. I've seen it as its own zone, but that's all one. Yeah, okay.
Yeah.
I got it now.
Yeah. Consolidation ranges are a little bit trickier to trade. But ultimately, as long as you understand market structure, then you should be pretty good to go. Because if we look at this structure, like we see low.
Yeah, and I had seen it all day. Like I was like, yeah, the sell is coming. Like obviously I don't know, but it was super likely, and I just got a bad entry.
Raul, quick psychology question for you. So, I've been trading for probably about the past 10 months, and I would say within the last two, I've transitioned into a break-even trader, and I'm trying to figure out how I can pretty much break past my psychological barrier of, I think what you called it in the course was paper cutting or profit cutting. And I think that's part of I've truly accepted the fact that trading is probability based. So yeah, if I have a TP, it's a probability it could hit. It's a probability it could not. But I've taken like 3 or 4 trades this week where I've pulled my profits early, and all of them have hit TP. And I'm just like, that's my barrier that's preventing me from, transitioning into a profitable trader. So have you ever went through that during your journey?
Of course, especially like right fresh out of a losing streak. It's hard for me to hold my winners because it's like, damn, I can close right now and make back this amount of loss. You know what I mean? But this is where we have to trust in our analysis. If we project price is going to go here because this is the next level, we have to stick to that as best as we possibly can, right? Just like I was talking about a few webinars ago, right? If price were to start breaking into this area, then most likely we're going to go to this area. Did do that right away? No. Look how long it consolidated before going into that area. You know what I mean?
Yeah.
We do multiple things. But at the end of the day, like if you've seen your trades go to your TP, that should be like, you know what, bro, last week, 4 trades or 5 trades that closed early and price win and hit my TP. Like I got to work on holding to my take profits at this point in time. As long as your take profits aren't unrealistic, obviously, you know what I mean? And not always shooting for home run trades. One thing that I had a problem early on in the beginning was I was consistently shooting for home run trades. And I'd be up 2-3 times my risk and price would go right back down and hit my stop loss, right? So, just understanding like the day-to-day process and the day-to-day targets. It's a process, you know what I mean? It's good that you're at break even already. But typically from my experience, what I've seen to get out of that break even stage are just like very minor tweaks, maybe looking to increase or taking trades with a higher risk to reward ratio, potentially looking at taking, what was I going to say, higher quality trades, and not taking any trade that you just randomly see, really focusing on those high probability setups that pay out, high risk reward ratios will typically push you past that break even point.
Yeah, I think I'm just excited to see like, all right, this trading shit is finally working. And whenever I see blue, I'm just ready to snatch it. You know what I'm saying?
100%. But you've got to stick to the analysis,
right?
Trading. You know what I mean? And that's going to be the hardest part. It's like right once you enter a trade, don't even look at your profit. Close your MetaTrader 4, set your stop, your take profit, and just focus on your trading view. So you're not looking at the swing in your P&L. Because trust me, when I see $10,000 on a trade, I want to close that trade so fast, right? But I've got to look at my projection of where I could see price go.
Okay, got you, man.
Yeah,
bro, that happens to me all the time, bro. Like for real. Like I was on a trade, I was up like $200, bro. I saw that shit go back to 30, and I'm like, I closed that shit quick, bro. I was like, but you feel me? And then it went straight back down to like $300. Like it could have made that, and I was like, damn, bro.
It's your emotions getting the best of you.
Facts.
Yeah, also
I gotta work on that.
Yeah, one thing to combat that is position sizing. Because again, if you have 10 grand in your trading account and you're only risking $100, what's $100 and $10,000? You know what I mean? It's not as much compared to risking $1,000 on the $10,000 account. You're going to be way more emotional. Those are the little things you could do to help ease the psychology.
I appreciate it, bro.
Yeah, bro, of course. Anybody
Bro,
else?
I got this other psychology question, bro.
Yeah.
So like you see on GJ right there, it broke support, and bro, every time it breaks support, bro, like it just goes so down quick, bro, that like I'll put a sell in like the middle, and then I'll put like a stop loss right. Yeah, like just imagine like I took it right there, right when it broke structure.
Yeah.
I mean support. I don't know why the fuck, bro, but I'm like in my feelings or some shit.
FOMO.
It is?
That's you not wanting to miss out on the move. So
right, man. I gotta
trade.
Yeah.
Yeah. So
gotta wait, right?
Work on that. And really at the end of the day, it just comes with more experience. But again, you have to consistently work on removing those habits.
Yeah.
All right, quick question. What would you say were the things that you did that made you improve as a trader over time?
That's not a quick answer. It's a quick question. It's not a quick answer. It's, to improve over time, it's like, bro, like, I mean, just imagine, there's so many things, it's a combination of like making so many mistakes and being so tired of myself to the point that I'm disgusted in myself when I make that same mistake. It's like, it's so many things. Ultimately, what really got my mindset right was understanding the math behind trading, understanding the probabilities behind trading, and understanding that I'm not going to get rich trading, a few $1,000s. That's ultimately what helped me the most, really, I want to say, is that's what really shifted my mindset.
All right.
Like I can go on and talk about like, always consistently looking to improve from my mistakes. But everyone's going to have a different journey. For me in specific, it was really like losing over and over and over again from the same mistakes, to the point where I was getting pissed at myself for making those same mistakes and for even allowing myself to continuously make those mistakes.
What was the mistake you made the most?
Bro, I would hop into the market and not wait for my entry. I would be over leveraging, blowing account after account. And I had a business prior to trading and I was making money for myself, right? So every time I'd blow an account, 10 grand, 20 grand, 5 grand. She was not cheap, right? And it was something that I never gave up on, right? And I continued to do it because I knew in the long term I'll make all that back plus more. But I had to fix what I was doing, which was making those same mistakes. That's where I understood money management and everything else. It's a very broad topic that I could talk about for hours on my trading experience.
Yeah, I've been taking the videos pretty slow, but so I just did the scaling into the entries video, and that's like I'm pretty good at math, just like naturally, and that makes a lot of sense. The scaling in,
like, yeah, because like if you look at like the scaling in, like it's a pretty good ideology for people who are really bad at entries, especially, right? So all you have to do is wait for that aggressive entry, enter at maybe 0.5% of a risk, and it can help a lot of people out, and it's something that I tested and it works out very well.
Yeah, and like you won't be scared getting into that aggressive entry because if you see the next entry, you still got capital to put in on the same trade. Like,
exactly. You're not going to hit your risk limits.
Yeah, right.
Yeah. Do you guys have any more questions? Anything you guys would want me to cover before we end the webinar?
That's pretty much all I got right now, bro. I appreciate you for real.
Hey, Ro.
Yeah, man.
What's up, bro?
I'm gonna open a live account. I'm thinking of opening my first live account in the next like week or two.
Okay.
Do you have any tips? Something I should pay attention to? when I open it?
Your first live account, you're gonna see if you were trading demo previously, everything is gonna change because now you're gonna have the emotional and the psychological aspect of what trading actually is. Don't focus on the money, just focus on building your skill set and risk management, more importantly than anything, is risk management. Remember, you're only going to be getting better at the game over a period of time by staying in it. Blowing accounts, you're out of the game.
Yeah, all right. Thank you. And I know you haven't chosen a broker yet, but where do you think I should open one from?
I did choose one. I haven't tested it yet.
Okay.
If it goes well, and I have a successful withdrawal and everything else, I'll let you guys know.
All right, bet. Thank you.
Latest, like mid next week.
All right, I think that's good.
But yeah, I had to build my office. I didn't trade last night, so.
All right, so fine. Thank you.
Yeah. Any more questions? Everybody's good?
All good. Yeah.
All right, cool. So I'm going to end the webinar here.